All right, traders, I'm going to be recapping the price action of the SPY today. This is going to help you in terms of strategies. I'm going to show you how to read price action so you can use what I'm teaching you when SPY does these patterns in the future. We're going to keep the focus on 30-minute candlesticks. I'm also going to be doing an in-depth price action analysis quickly towards the end of this video on what I'm looking for in terms of SPY next week. This Sunday, there's going to be a much more in-depth video on that, so make sure to subscribe to the channel. With that being said, this was definitely our best day of the week within Trader Society. One of the most successful students. He wants this to remain anonymous. He wants to remain anonymous, but he ended up making over 6 figures today. He had his best trading day today. And we had many members. A couple made 5 figures, some made a couple thousand. This was a very, very good day, and this was my best trading day of the week. And I'm going to show you in terms of the main trades that we ended up taking. So first things first, as I explained in yesterday's video, we were looking for puts at market open. As you can see right here, the key level cracked at $400.66. It formed a bearish gravestone doji. When you see that reaction, you're going to want to short the SPY, short shares, play puts. So in the pre-market, you could have shorted shares. In terms of market open, what was the reason to short? It's been selling off at market open for several times heading into this week. So when it cracks that previous low and reacts as a resistance level, so right here, it cracks the previous low, wait for it to pull back. When it pops back up to the previous low and reacts as a resistance level, short the SPY, play the puts at open, right? So that was one of the first trade ideas in terms of what you could have used, right? So pattern trend recognition. This was the one that I ended up taking using 30-minute patterns. I'm going to show you how I was able to play puts perfectly at this time. So look at this pattern right here. This is yesterday. See how we have this green candlestick right here, and then we have this kind of like trend reversal green candlestick right here. See how we have this green candlestick right here, and then we have this trend reversal green candlestick right here. What happens on the third and fourth candle? Well, when it forms this red candle, that's the beginning of the downtrend, right? So if you see that red candle form, you see that red candle form right here. Here's the red candle. What are you going to want to do on the next 30-minute candle? You're going to want to short SPY when the next 30-minute candle opens up. That's why I was shorting SPY right here in the 395s, because I recognize that pattern. It had 2 green candlesticks, then it follows up with a red candlestick, 2 green candlesticks, then it follows up with a red candlestick. Compared it to yesterday, and I said, okay, what happens after that? It ends up dropping the next 30 minutes. That was one of the reasons why I played puts. Also is because the previous day's low already crashed and reacted as a resistance level. So if it's going to retest and be a double top, it's not going to be ideal for puts unless there's some sort of strong pattern, strong confirmation, because everybody already knows its resistance. So I looked and I said, okay, the previous low is reacting as a resistance. It had a nice pullback. I also mentioned in yesterday's video the V-shaped recovery for calls at 393.50. So when it spikes back up to that previous low and reacts as a resistance level and it forms a bearish pattern in this case scenario, I looked at yesterday's chart and I said, okay, there's a nice green candle, there's a trend reversal green candle. When does the trend shift bearish? After it forms the first 30-minute bearish candlestick, after it forms the first 30-minute bearish candlestick like it did right here. So that was in terms of the play for puts. I looked at the pattern, compared it to yesterday, history repeated itself. Very simple trend recognition, right? So I'm waiting for these 30-minute candlesticks to close. And when they close and the next one opens up every 30 minutes, I'm seeing if there's some sort of pattern, some sort of trend at the key levels. So this is a key level because it's yesterday's low. It's not the best level, but if it cracks and has a big pullback and instantly rockets back up and then forms a bearish pattern right here. So 2 green candles, 1 red candle. What happens after the first red candle? It sells off. What happens after the first red candle? It sells off, right? That's why I decided to play puts on the retest in that case scenario. So I want you to focus on 30-minute candlesticks when they close, see if there's some sort of pattern, and combine that with key levels. Combine it with key resistance, combine it with key support, combine it with the gaps. You should do very, very well. Look at this 30-minute candlestick gravestone doji, very, very bearish at the previous close price. Like I told you guys, if it breaks down, reacts as a resistance, you're going to want to short the SPY and it should drop at the open. I also said look for a recovery, look for a V-shaped recovery. We had a very nice V-shaped recovery right here into the close. We did take advantage of that opportunity as well, buying call options when it formed this first 30-minute green bullish candlestick. I was mainly focused on call options from there, and I did well on calls too. Big shout out to Top G. He ended up doing a live stream on Voice today. Very, very helpful for the members within Trader Society, and he gave out great trade ideas. He ended up playing puts 3 times in a row at $397. Literally at the peak, he scalped 0 dates for quick 10-20% returns 3 times in a row, back to back to back. So those are the things that I want to bring awareness to, right? So just to kind of quickly recap, I want you to focus on history repeating itself. I want you to focus on patterns with the 30-minute chart. Every single time a 30-minute candle closes, a new one opens, right? So in terms of, pattern recognition is what I call this. You have a green candlestick, you have a trend reversal green candlestick, you have a red candlestick, this double top right here. What happens after that red candlestick closes? It sells off, right? So the same exact pattern, nothing hard, right? You have this green candlestick right here, this trend reversal green candlestick right here. You have the first red candlestick. What happens on the next 30-minute candle? It sells off. Same pattern, same history. And in terms of the level, it was at a resistance level. Previous day's low, cracked, went all the way to 393.50, shot up instantly, formed the bearish pattern where it crashed open yesterday, hence why I played the puts, utilizing the 30-minute chart in terms of the level. Previous low, already crashed, had a big pullback, reacts as a resistance on the double top retest. Very, very simple stuff. And this is what people are not showing you in terms of trading the SPY. They're not showing you how to read 30-minute candlesticks. They're not showing you the importance of 30-minute candlesticks. The reason why 30-minute candlesticks are so important is because if you look at these candlesticks, for the most part, either bears win for 30 minutes or bulls win for 30 minutes. Not too much in between, in a sense, if you're focused on buying dips and shorting rips. So if you have the ability to know what's going to happen for the next 30 minutes, you can make a good 2 to 3 scalps in and out. And those trades would be like 2 to 5 minute holds very, very quickly within those 30 minutes, right? So if you have a pattern that's saying, oh, it's going to flip bearish, it flipped bearish, time to buy puts. Within that 30 minutes, instead of just buying puts and holding for 30 minutes, you can scalp in and out 2 to 5 minutes, 2 to 3 times. And in terms of, well, where are we going to be scalping within those 30 minutes? We're going to focus on resistance levels for puts, for shorts, and we're going to focus on dips for buying for bullish patterns, right? So that shows you a bearish pattern. And like I said, I'm pulling this out of history. I'm studying history. I'm looking back all the way throughout the 30-minute candlesticks, and I'm trying to find patterns. I'm trying to find patterns at key levels, right? So I'm saying, okay, SPY cracked the low of day. It had a big pullback. If it retests that low of day, and, I'm going to look for some sort of 30-minute pattern for a double top, right? That's what I'm going to do. I look for big overreactions, right? That's the main focus. That's what I want to bring awareness to. I studied the key levels. Yesterday's low is a key level because it had a massive spike off of yesterday's low. But if it cracks, it's going to have a massive crash. So if it instantly has a massive crash and rips back up, I'm going to look to short. Previous support reacts as a resistance, but I want some sort of pattern, and I'm looking for 30-minute patterns. So I basically used the 30-minute pattern from yesterday right here. Same exact pattern. Very, very simple stuff, right? Now, how many of you watching this video did not have awareness to that, did not see that? Because I brought this up in my chat room, and the puts did very, very well for the time being. We were in and out, right? And then the call opportunity was, as you can see right here, this pattern was bearish. Well, when it forms the first green bullish candlestick, what does SPY do? It forms a V-shaped recovery, right? So that pattern that I pointed out, the only difference was it sold off and it dropped more than 30 minutes. But the point being is, when it forms that 30-minute green bullish candlestick at support, nearly towards the lows right here, that's when I was call focused after that. Because if you look at the pattern, once it forms that green bullish candlestick, the SPY starts to recover and does a V-shaped recovery, So it was nearly identical almost in terms of yesterday. Nearly identical. Very, very simple stuff, man. This was a very simple green day. Like I said, one of the best traders within Trader Society. He wants to remain anonymous right now. He made over 6 figures in one single day. Jim C made tens of thousands of dollars. Top G did very, very well. As a chat as a whole, this was definitely our best trading day of the week. In terms of my entire week, this was my worst week of 2023. This was not too great of a week for me, but today helped out a lot. So with that being said, that's how you trade the SPY in terms of next week and what I'm looking for into next week. Basically what I'm looking at for next week is I'm going to do a more in-depth video on this, but just to make things short and sweet, the bottom is there. I could see one more gap down, one more crash, but we're getting towards the bottom. In terms of the bulls, to flip the trend bullish, what they have to do is this. In order for SPY to flip bullish, they need to break above the previous lows right here, which is at 396.25. If they can break above the previous closing price of 396.38 and turn that into a floor, then the SPY is going to flip bullish and it's going to start to fill the gap at 466. And then that's where you're going to want to look to scalp a put at 466 with the tight stop at 401, right? So 396.38 is make or break. If it reacts as a resistance, then they drop it back to 393.50. As of now, 393.50 is the best level to buy the dip. Not the best setup at the best price though. You would need strong bullish 30-minute patterns in my opinion, strong confirmation, strong indicators. 396.30 is make or break. Reacts as a resistance, goes back to 393.50, reacts as support, then we explode to fill the gap at 466. Once we fill the gap at 466, we should see an initial pullback for a quick scalp on puts. So 396.30 is make or break. We're towards the top of a micro channel. In order for the bulls to flip the trend micro bullish to fill the gap, they need to break above and hold 396.38. If we crack under 396 and that reacts as a resistance, then we sell back off. That's my thoughts. That's my analysis. So if you want to use this weekend to study and be a part of Trader Society, this is the best time to join. It's a one-time fee and it's lifetime access to the entire program. For a limited time only. You'll be grandfathered in for a lifetime. The price is going to be going up heading into end of March. We're going to be raising the price. And with that being said, this is the best time to join Trader Society. It's a one-time fee. You get lifetime instant access. All of the information is explained down below. And as soon as you join, you could start studying. Over the weekend, you could start studying over 100 hours of the video lesson library and the live trading streams. You also get access to the network, the community, the traders, the moderators, the Discord server, the live trading stream, the voice channel. It is all included within Trader Society. All the information is explained down below. I will see you guys on Sunday, and I will be in the chat answering questions from here.